So Mark, if you're in the SAVE plan right now, what is going to happen to your loans?
Well, starting August 1st, they will start accruing interest, and that interest will be added to your loan balance. It won't be capitalized just yet, but you'll be in a general forbearance for at least another month. But you should consider switching into the income-based repayment plan so that those monthly payments count towards eventual forgiveness.
So you said you should expect to be in the forbearance period for at least another month. When should borrowers expect to start making payments again?
Well, the Trump administration has not yet said when that forbearance will end. Based on previous announcements from the Biden administration, it suggests that they'll restart in September, but we haven't had any information one way or another from the U.S. Department of Education.
Is there anything borrowers with loans outside of the SAVE plan need to be doing right now?
Well, there's several different income-driven repayment plans that are ending. It's not just the SAVE repayment plan, but any repayment plan that was based on income contingent repayment, such as the PAYE, the pay plan, and the repay plan, those will be ending. The income contingent repayment plan, they're going to start phasing that out because of the budget reconciliation bill. And in general, those don't count towards forgiveness of their own. The payments you make will count towards forgiveness under income-based repayment. So if you want to eventually receive forgiveness after 20 or 25 years, you need to switch into one of those repayment plans.
You
There's a
mentioned.
new repayment.
No, continue.
Okay, there's a new income-driven repayment plan called the RAP plan that was introduced by this new legislation. Uh, we expect that it'll become available sometime this fall.
So how does RAP stand up against some of the existing plans like SAVE? And I know you mentioned IBR, that's the interest or income-based repayment plan as well.
Right. So comparing RAP with IBR, the monthly payments under RAP are a little bit lower than under IBR if your income is lower than about $80,000. So if you're low or moderate income, you'll have lower payments. But the number of payments you have to make until the remaining debt is forgiven is 30 years, whereas IBR is 20 or 25 years, depending on whether you have loans from before July 1, 2014 or just afterwards.
And let's talk policy too. How does President Trump's bill change the student loan repayment system at this point?
Right. So for new borrowers, as of July 1, 2026, they will have only two repayment plans available. A standard repayment plan, which is more like an extended repayment plan. The higher your debt, the longer the repayment term that's available to you. If your debt's under 25,000, you'll have a 10-year repayment term, and it goes all the way up to a 25-year repayment term. The other repayment plan is the RAMP plan, which bases the payments on a percentage of your adjusted gross income, ranging from 1% to 10% as your income grows. If your income is over $100,000, you'll pay 10% of income towards payments on that debt. And the remaining debt will be forgiven after 30 years in repayment.
And when do these go into effect, these new plans under the Trump administration?
For new borrowers as of July 1, 2026, they will be in those repayment plans. They will also be phasing out the income contingent repayment plan through July 1 of 2028.
And then when you're talking to borrowers, what are some general tips when it comes to them paying back their student loans? And are there resources that people can turn to try and make this an easier process? Because it can be very complicated.
Well, they can talk to the college financial aid administrator at their college, who can provide them with some insights into these plans. It is going to be simpler in a way because currently there are a dozen different repayment plans, including as many as 4 different income-driven repayment plans, 2 extended repayment, 2 graduated repayment, and 1 standard repayment. So it is going to get simpler. But the only way to tell whether you're better off with the standard repayment plan or the wrap plan is to model it out for your own particular circumstances. There are very few rules of thumb that say which is better for you when.